Hey everyone, welcome back to Corporate Decoder, the place where we, decode corporations. Today we're diving into Orthofix Medical's latest 10K filing, their annual report, and let me tell you, it's a real bone chiller, get it? Okay, maybe decoding this won't be that scary, but it will be interesting, I promise. Orthofix, in a nutshell, makes medical devices to help heal bone and muscle problems. They just finished a big merger, so this report gives us a peek at how that's going, plus the usual risks, financials, and future plans. Buckle up, let's get started. First things first, let's get our bearings. This annual report is like a treasure map, and the table of contents is our key. Before we even get to the good stuff, we have to acknowledge the boring stuff. It's important to remember that these reports are filled with forward-looking statements, which basically means Orthofix is making educated guesses about the future, not guaranteeing anything. Things could go wrong, so keep that in mind. Now for the real meat. One of the biggest things hanging over Orthofix is their recent merger of equals with C-Spine. Merging two companies is always tricky, and the report admits they might not be able to completely integrate everything smoothly or get all the benefits they were hoping for. Think of it like trying to merge two Lego sets. You might end up with something cool, but there could be some leftover pieces and instructions you can't quite figure out. Operating internationally is also a big challenge. Orthofix has to deal with tons of different regulations and laws all over the world, and messing any of those up could lead to big trouble with governments. Here's a weird one. The FDA, which regulates medical devices in the US, might change the classification of bone growth stimulators. These are devices that Orthofix sells, and a change in classification could mean more competition. It's like suddenly letting anyone enter a race that only pros used to run. Let's talk about Orthofix's stock. It trades on the Nasdaq under the ticker OFIX, and here's some financial context for you. For 2024, Orthofix's net sales were almost $800 million. Pretty impressive, right? It's important to note that Orthofix didn't pay dividends in 2024, meaning they didn't hand out any profits to shareholders, instead deciding to invest back into the business. So how does Orthofix plan to make even more money? Their strategy for the spine business involves launching new and improved products, expanding their sales channels, and collecting clinical evidence to support their existing goodies. Think of it like upgrading your game, new weapons, better maps, and proof that your character is the strongest. Over in their orthopedics business, the focus is on limb reconstruction. Here they are prioritizing their OrthoNext digital platform to enable surgeons to plan surgery with a greater degree of confidence, reduce surgical times, enable better outcomes, and follow up post-operatively to evaluate the success of the chosen surgical plan. Like any good tech company, Orthofix has a research and development R&D department cooking up new inventions. In 2024, they spent about $73.6 million on R&D. It's all about creating the next big thing, with teams consulting with surgeons, engineers, machinists, and regulatory staff. Of course, success is never guaranteed. Orthofix faces serious competition in all of their markets. Competitors are coming up with new products, snagging technology licenses, and trying to undercut Orthofix. It's a constant battle for market share. Like pretty much all companies in the healthcare space, we have to play by a lot of rules and regulations to stay out of legal problems. We have a ton of laws regarding healthcare fraud and abuse that we have to abide by. Federal agencies are constantly increasing the level of scrutiny over the sales practices of medical device companies, and that affects how Orthofix can promote its products and compete in the marketplace. Okay, time for some potentially bad news. Orthofix has a lot of intangible assets, things like goodwill and patents. If these assets lose value, Orthofix might have to write them down, which would hurt their profits. It's like finding out your vintage baseball card collection isn't as valuable as you thought. Here's another challenge. Orthofix has to keep a lot of inventory on hand so they can meet demand. But that inventory could become obsolete or expire, costing the company money. It's a balancing act between having enough stuff and not having too much stuff. Let's peek at the human side of things. Orthofix employs over 1,600 people worldwide. They say their priorities are attracting and keeping top talent with a focus on diversity and inclusion. One product that is very important to mention again is Machine Vision's 7D Flash navigation system. The company released a new feature to the 7D system called 7D Mr. Vision, which utilizes Mr. Igadance's bone MRI software to generate a synthetic CT from an MRI scan that can be used for surgical planning and spinal navigation. Now, the part everyone skims over but is critically important: internal controls. Orthofix's management admitted to having an ineffective system of internal controls. The management, or our independent registered public accounting firm, were to discover material weaknesses in our internal controls. We may be unable to produce reliable financial reports or prevent fraud, which could harm our financial condition and operating results, and could result in a loss of investor confidence and a decline in our stock price. Orthofix US LLC has been accredited by the Accreditation Commission for Healthcare, Inc. for medical supply provider services. This is a good signal that the company has been recognized by a high standard of competency and a willingness to strive for excellence in its products, services, and customer satisfaction. Finally, let's look at the financials and the stock. The aggregate market value of Orthofix's common stock held by non-affiliates based on the closing price on June 30, 2024, was approximately $504.4 million. As of February 21, 2025, there were about 39 million shares of common stock outstanding. Alright, we've made it through this rather long report, so what do we make of Orthofix? On the plus side, the merger seems to be generating some revenue, but as I had said previously, merging always involves a lot of risk. In addition, they are making money, not losing as much as they were before. But all the risks they lay out make it clear that the medical device market is always changing. One thing I like is their commitment to R&D because it shows they're trying to stay ahead of the curve. One weakness is their current debt load, which will definitely limit their flexibility. Ultimately, I'd say Orthofix is a company with potential, but investors need to keep a close eye on those risks and make sure that the company executes its plans flawlessly. Thanks for watching Corporate Decoder. If you enjoyed this deep dive, hit that like button, leave a comment, and definitely subscribe for more financial analyses that aim to take the bore out of business reports.